Okay. So Bollinger Bands. So this, we got to explain this one. So this one's a little unusual. It actually hasn't, it started doing great, hasn't performed great lately, but it started out gangbusters, and then it's had issues recently. But like I said, these are trade ideas. I look for, what I look for, and Sean, you can tell people what you look for in these. I look for strong names that come into these, for trade opportunities, and then, I'll open up and I see, Microsoft or some strong name that I'm pretty up on as far as following it and how it moves. So I see those, and sometimes they're no-brainers. I see Facebook and a deep pullback. That's kind of like a no-brainer. Other ones, I'll kind of check and verify, but the only time I look at these, I look at them every day, but the only time I look to trade them is when I'm, bullish on the market. So, okay, so this is just, a small drop in stock price from peaks. So it's still in state one, so it's still in that general uptrend, but it just had like a minor pullback while still in that state one. And it's also above the 50-day SMA. So the key for this is that it holds in that state one and resumes upward. So we use the 20 days and 2.5 standard deviations for the Bollinger Band. We're across below, and it has to hold above that 50-day SMA, and then it's in state one. So Bollinger Bands, we explained the Keltners. So Bollingers are very similar. So Bollingers are based, centered on the SMA. So if it's a 20-day Bollinger Band, you're going to be using a 20-day SMA as the center of the channel. And then, based off of the width of the channels are going to be the standard deviation, and that'll be a multiple. So we had 2.5 times standard deviation. So each channel width will be 2.5 standard deviations for that 20-day average. And we'll show the representation here. So when things are volatile, it's going to be a lot wider. And then as things quiet down, the channels get a lot tighter. And this is Humana. So one part of this is standard deviation. So, how much it deviates from the mean. These are, we do all these calculations automatically in the system. So as I showed in that chart there, as things are, deviating from the mean, further and further, your bands get wider. Your standard deviation range gets wider, so your bands get wider. So like before, it was a lot higher, and then you can see it pretty much flattens out. So then your standard deviation, over that 20-day period comes down and down. SMA it is simple. So you just do the closing price over that average over that days. So it'd be the average closing price over 20 days. So I put in here the 50-day SMA. You can see, for that entry we're going to be looking for, it closed right above that 50-day. So putting the whole Bollinger Band thing together, we have the standard deviation. We have the 20-day SMA here, so that's the center of your channel. And then you can see as its standard deviation drop, your channel gets narrower and narrower. And you can see a cross below over here, and that was our entry point. So on 6/11, Humana triggered the Bollinger Band. You know, we do long calls, and bull puts on these. So I'm showing the long call here, which would be, 30 delta or greater. So that's our entry point here. So here's the state modeling. So Humana went into state 1 April 17th. You can see, when we talked before about support and resistance, you can see it was having pretty good resistance at that target 2, tested, dropped significantly, came back, tried again, and then came down to that entry price, which would be support. So, the thing I like about this trade is a lot of things aligned. So it's right above the 50-day SMA. Which is right here. So it's holding right above that 50-day SMA. It's right on entry support, as far as state modeling. So those two things, are very strong indications, things like lining up and telling you the same thing, that you're on strong support. So this is our entry. So it didn't get much lower, kind of stayed there for a little while and then kind of popped up. Obviously this would, if you look at this chart, this is not going to be good for the long call because it hadn't moved up enough in a shorter period. The bull calls and the bull puts will be good for this trade, but I don't think it's just not. I don't think it's moving enough in a short period. It's almost a month later. That I don't think the long call will be sufficient, and that's what happened. I didn't want to show you guys all winning trades. So this one expired 8/21. So over here. So obviously, the difference in price, you entered at 373. It goes up a bunch, $40, but it didn't go up quick enough. So that's the problem. You had a 410, so it finished in the money by 879. But, and so I just kind of wanted to show you the pitfall of the long call, whereas the other ones would definitely make out. So, it just took too long to get up there. So those long calls, you didn't lose max here. But, it wasn't a winning trade, obviously. So if you don't get it right in a very short, I wouldn't say very short, within a few weeks, if it's not getting up there, then long call is going to be tough to turn around. So, this is so this is the analysis type thing that we do for each trade in our back test. So it gives you, here's your entry and here's your strike. So this is the daily profit loss. So you can go, it'll scroll and tell you the amounts and things in the system. But you can see, if we entered here, it just didn't ever, here was our time to get out at a profit. It wasn't near, it's getting close to 410, but then it kind of turned around and then you're, it's almost game over at that point. So you can see here, it's, multi-month period. So if it's not, if it doesn't move kind of like, you start here and get here, then, possibly, but it just didn't move enough. The bull call, from that chart, we see it never really got much lower, on a closing basis. So this trade was fine. Closed on 717. So if we go back to that chart, so I closed in here. It hadn't even, gone up a ton from there. It's kind of moving sideways. And then, here, it's enough time had expired that you made the money. And it had gone up, it had gone up a pretty good amount. So it had gone up, this one had gone up $45. This one had gone up, 30 when you were able to close it out. So, and this one closed out earlier, on the 8th. So, like I said, for these two types of trades, as long as it's sideways or, slightly up, or if it goes straight up, you're going to win. As long as, even if it drops a little, a moderate amount, you're still going to be good over time. As long as it doesn't, get near that strike, then you'll be good. So long calls, these haven't modeled, hasn't performed as well. It's still slightly making money, but it's not holding at 75. And I think that's just, the drops really killed it. Back here, the whole Corona, we had a lot of stocks in state one. They had a big standard deviation move while in state one, and then the market kept going down. So, bull calls, marginally making money, almost not quite. I mean, obviously it's not modeling as well as it had. If this was like 82 historically, it hasn't. But you can see here it was doing great. And then Corona. So, that was, kind of lesson learned on that one. These don't populate as much. They're kind of hard to find. So you won't be seeing them as much. There's only 80 trades since January 18. So, but obviously it was doing fantastic up until, I guess July 19. So, and then this one is actually the puts, it'd been doing well. It really got hammered in the Corona. So, until this thing, until we get in a bullish market, obviously I'd kind of refrain from these. So, I'm not trying to hide. We don't try and hide any of the data. This is, obviously as in, the win percentage is decent. The other thing I did want to say, how we tested them also, we only used one contract. We couldn't really level the risk amount between, thousands and thousands of trades, between different studies where we're saying $1,000 per trade. Because sometimes, you'll have Amazon, it'll be a $4,000 trade, and sometimes you'll have, like a Bank of America or something where it's, 150. So we just did one contract. So the profits amounts could be a little deceiving, I think. It'd probably be a lot better, if you're looking at win percentage as kind of the most important as far as this data. We can go in and try and level the risk. It's just like it's very difficult when you have so many symbols. So we just put it out there as one contract, and if you have one trade that it's a big trade compared to everything else, and it can really skew the results. So I just wanted to put that out there. Okay,